You're never going to eliminate 100% of your risk. It's just not a reality, nor should it be a goal. Oftentimes as a business, you're looking at the premium and saying, all right, that's the issue. But it's not getting at the root cause. And we're working with a company 6 months or 9 months, and it's just not improving. There's a real come to Jesus moment in saying, why isn't this happening? And with the cleaver, chops one end and then goes over his arm to chop the other end. And as a risk management person, I'm like, he is this close to losing a hand. What you don't see is the interruption to the business and what that is costing the business behind the scenes.
Hi, and welcome to the Key Concepts podcast. When you hear the word risk management, you often don't think about insurance, but that's exactly what it is. Insurance is a form of risk management, and it's not just about premiums, because that's what most people get wrong. So today I'm joined by my special guest, Nathan Glass. He is the co-founder of Utopia Risk, where they help businesses increase their profits by cutting out those hidden premiums and costs. So Nathan, thank you so much for being with us today.
Yeah, thanks for having me. I appreciate it.
For someone hearing about Utopia Risk for the first time, could you explain what do you guys do and a quick overview of your organization?
A lot of the companies that we work with, and we just work with companies, is they're used to dealing with just the insurance portion of their program. And so we try to open up their mindset a little bit to realizing that it actually starts with prevention. And then you move on to the protection part, the insurance part, and some areas that not everybody's familiar with. And then as your company grows, sometimes they can get into what we call the prosper part. There are some really advanced strategies that companies can use that they don't realize. They can use some of the big tools that your Amazons, your Fortune 5,000 companies are utilizing at a much smaller scale to actually really reduce what they call their total cost of risk, just fancy term of saying the big picture.
Nice. And so is this risk in the form of liability insurance or form of other type of risk? Or like, how would you explain what that risk management and insurance looks like?
Yeah, a lot of times it'll tie back to some sort of thing like liability or workers' comp or making sure your property doesn't burn down or have claims. So a lot of times it's tied back to those particular areas that people are familiar with. But it's the stuff on the peripheries that maybe they're not thinking about that is really where we start to make some adjustments.
It sounds like risk identification in a way then.
Yeah, that's really what it is. And as you're running a business and you're focused on the growth and so many other things that you need to focus on as a business owner, which is what you should be focused on, you start to kind of be blind to some of those things that are actually risks that could easily turn into major claims, major issues for your business. And so it's just kind of saying, all right, this is what's going on. Let's actually take a look at it. These are the simple things you can do to fix it to make sure that you don't have a problem down the line.
That makes sense. I mean, if a business owner works so hard to build their business and they're kind of out of sight, out of mind with some of these risks, it could easily shut them down. But what led you down the path of risk management insurance? Like, how did you get into this?
Yeah, I mean, insurance, there's a million insurance agents out there, and kind of the focus is on the insurance part, right? And oftentimes as a business, you're looking at the premium and saying, all right, that's the issue. But it's not getting at the root cause. And the root cause and the simple things that businesses can do at the end of the day are really what can make an impact and actually increase their profitability as a company. And so when you look at the root cause to be able to impact the business on a greater level, that for me was just, that was the big difference, because there are a lot of people that can talk to you about insurance. There are fewer people that are out there looking at the really the baseline of everything and the bigger picture of a business.
Yeah, I've heard that audits and stuff like that are happening more frequently as well.
Yeah.
So on your website, I was checking it out, and it shows that you guys really focus on like contractors, realtors, and restaurants, things like that.
Yeah.
So of all of the different sectors, it kind of sounds like you guys lean more towards the blue collar sector.
Yeah.
Is there a reason why you guys went that path versus like a other organizations or another path?
Yeah, it's a little bit of background. So, I spent years in construction, and before I got into the insurance game, as well as my business partner, he spent much of his time also in those industries. And that's also just where we feel there's a greater impact that we can make. There's less resources being dedicated, and we can go in and really help a company from the bottom up and make some real significant impacts for not only the company itself, but for the employees and the organization as a whole.
Nice. Yeah. So you're covering some of the blind spots, people that probably need some risk management without knowing that they need risk management. Let's say a company is out there in one of these sectors and they want to reach out to you and get in touch with you. Like, what does that first call look like? What are you trying to uncover?
We're really starting with what they have going on. Obviously, they want to focus on their premium and driving down their premium. But a lot of the questions we get into is, all right, that's what you have on the insurance portion. What does your claims process look like? What are you doing to track what incidents are happening, those near misses? So, all right, this person slipped and fell and they didn't go to the hospital this time, but if it keeps on happening in the same place, the exact same way, what can you do to prevent it from turning into a major issue at the end of the day?
So it's kind of like trying to assess what they already have in place, what they don't have in place, to create kind of that game plan of like, how do we start identifying what those risks might be, and how do we set up that next conversation to dive deeper in some areas. So it's kind of more of a preparation of maybe like a checklist or things to maybe uncover in a way.
Yep, exactly. That's exactly what we have. So we have a checklist that we go through. We like to be as often as possible in the businesses. We like to, if it's a restaurant, we like to walk through the kitchen and see what's going on. If it's a real estate investor, we like to see the properties and what practices they have. If it's a manufacturing company, walking the floor. And what that allows us to do is when we have eyes on the situation, we get to see the things that the business owner doesn't tell us over the phone. And so probably one of the things that opened my eyes most to this was early in our kind of journey down this risk management path. We were doing risk management for a restaurant, and we were just walking through, seeing what was going on, and the insurance and risk management guys there. You think everybody would be on their best behavior, right? But one of the prep chefs, what he's doing is he's chopping the ends off of these full-size carrots, and he has this giant bag of carrots, cleaver in one hand, and he grabs a handful of carrots and with the cleaver chops one end and then goes over his arm to chop the other end. And as a risk management person, I'm like, he is this close to losing a hand. Somebody walks by and bumps him, or the floor is wet and he slips. They've been doing it that way for years. Never an issue, but that close to being a major issue. And so it's just something else to actually see that particular instance and say, hey, let's just adjust this. Let's get a cutting board. Let's not chop over the hand, just turn the carrots, and you might be half a second slower than the way you're doing it, but you're preventing a major issue down the line. And it's really things like that allow us to make an impact for a company, because it's never an issue until all of a sudden it's a major issue.
Geez, that hand getting cut off, that's going to be hundreds of thousands of dollars of medical claims. I know when I was younger, like 8 years ago, I fell out of a tree and I broke my pelvis. One, I shouldn't have been in the tree in the first place, but I think my medical bills were like $200,000-ish. So like, can that restaurant afford that type of claim? That's kind of crazy.
Yeah.
When it comes to risk management, what are the common misconceptions that people believe that simply aren't true?
I would say the time commitment, and that's probably the biggest thing at the end of the day. Is there's this perception that, okay, if I need to go in and change how we're doing this and start talking about safety, it's going to take away from actually running the business. And what companies don't realize is that little step at the beginning actually saves significantly on the back end. And the reason I say that is because let's say somebody gets injured. And obviously there's what we refer to as the hard costs, the medical bills that you're talking about. And in a workers' comp claim situation, you're also paying for their loss of wages. So there's that aspect of it as well. But that's the dollars that you see. For every dollar that you see, according to the Bureau of Labor and Statistics, these are their numbers, not mine, there's 2 to 8 times soft costs. And so what you don't see is the interruption to the business and what that is costing the business behind the scenes. So you may say, all right, this is kind of annoying to spend 5-10 minutes doing a toolbox talk for a contractor on a weekly basis. But what is it saving you on the back end? And what is that doing for your company and the profitability of the company on the back end? A lot of times they don't think about that and see that as actually being beneficial to the company. So I would say that's probably the biggest misperception.
Well, yeah, I mean, hard costs versus soft costs, man, yeah, if you have staff that get demoralized or feel like you don't care or you lose that culture, that is so hard to gain back. So having the right insurances in place and showing that you actually care about the staff,
Right.
That's definitely going to go a long ways. Once trust is lost, it's hard to get back. I guess I'll put it that way.
Yep, absolutely.
When it comes to insurance, most people just think about their premiums though. So like, why is that only the tip of the iceberg?
Yeah, and that's a great way to describe it, the tip of the iceberg, because that's what everybody sees, right? It's the part that's above the water. You see it, you realize it. What you don't see is the iceberg below the water. And those are things like your risk management practices, your soft costs. There's just so much below the water that companies don't realize. And unfortunately, that's the biggest part of it. And so we can take a look at the premium, which so many companies do. But when we sit down with a company and we're kind of helping them look at that bigger picture, starting to factor in everything, that's where they start realizing, oh my gosh, there's so much more to this than I realized. I was having a conversation with a real estate investor who also has a contractor business. I mean, good sized organization. And the way that he manages his insurance program is he handles a lot of the claims out of pocket. Totally fine. But when he was talking to us about his current program and what he was looking to do, one of the things he brought up was he's saying, okay, we're paying $400,000 right now. We're going to save a little bit by going to a high deductible plan, but overall, it's going to reduce the profitability of our company because of X, Y, and Z. And I said, really? You think so? And he's like, yeah, of course it is. I'm going to have to, pay more money over here in this thing that's kind of like a health savings account for businesses paying for these small claim situations. And he's like, it's a combination of that and the insurance policies are going to be more than the $400,000. And I said, well, how much have you paid out of pocket for these claims over the past couple of years? And so he told me. He also had just gotten done telling me about how the contracting company, when they do have a claim, that contracting company, they do the work. They'll do the renovations and everything like that. But he won't charge the insurance company full market rate. He'll not charge for any overhead. Oftentimes he won't charge for the labor. And so that contractor company is actually reducing their revenue. And so that plus the out-of-pocket expenses, plus so many other things that he has going on, all of that together is the total cost of risk. He's looking at the premium that is going out the door that he's writing a check for every single year. He's not looking at what I paid out of pocket, what I'm losing over here, the lack of somebody in that unit generating revenue for that company. And so when you actually look at all those different aspects, that's the big picture. That is everything below the surface of the water for that iceberg.
Do you also then review all their insurance contracts and make sure that they have the right insurance for the right things and like insurances that they may be missing, and then evaluate like where they can do adjustments or if the insurance is even covering the right liabilities in the first place?
There's really two different aspects to what we do. One is analyzing the insurance program, as we refer to it, and then the other one is the risk management. And so the analyzing of the insurance program, that's the part where we get into these contracts. They're legal contracts, they're large documents, they're very complicated. A lot of times there are double, triple, quadruple negatives throughout these contracts. And so making sure that those contracts fit the business and their situation is kind of that protection piece that when we come to it, that's what we're focused on. When it comes to making recommendations for insurance coverages, up until this point, it's hard to do it on hard facts and statistics. There's some new tools out there. They're really only tailored to the cyber liability part of the business right now. But there's this really cool tool out there for cyber liability where it's saying, okay, based on the facts of this business, we predict that 99 or whatever percentage of claims will fall below this amount. So now we have the ability to go to a business and say, when it comes to the cyber liability aspect of your business, this is your exposure. And so if you decided to purchase a policy for, say, $5 million, 97% of the claims that you would likely experience and similar companies would experience would fall below that amount. And what level of confidence does that give a business owner to say, all right, I'm 97% sure, the industry is 97% sure that this is the right coverage for me. And so we can go on and go down the road. And if you want to take a larger risk and say, all right, I'm good with 75% for $1 million, that's fine. That's the decision you make. But at least you have all of the facts and statistics behind the scenes.
So it sounds like liability insurance is a little bit harder to like zero in on than property insurance.
Yep.
So with these new tools, you could kind of get a better like angle as to what is that liability insurance. It gives a score, and based on that score, the person can accept 95% coverage. Generally, obviously, there's anything can happen, but that 5% is within range of something that might be tolerable.
Yeah.
You mentioned this on your YouTube channel as well, risk tolerance. So what is risk tolerance?
Yeah, I brought up this real estate investor, so we'll just continue with that story. He had a higher risk tolerance. He was okay taking care of the smaller things out of pocket. For him, $100,000, no big deal. Up to $250,000, he's still pretty okay. That's an entirely different mindset than some people. Some people, they're like, I don't want anything out of more than $5,000 or $10,000. And so that's on the deductible. That's what they're okay there. There's also certain areas where it's maybe not so much the deductible, but do I want coverage here or do I not want coverage here? Do I want to take on that exposure personally and really self-insure it? And so what our job is to educate. These are the exposures you have. You make the decision based on what you feel is appropriate. It's not our job to go and say, you need to do this, you need to do that. It's our job to show you what's going on, what risks your business faces, give you some recommendations in case you want some guidance. And then from there, as a business, you're deciding, okay, this is something that I want to take on. I'm okay self-insuring, or no, I'm not.
Yeah, that makes sense. So it's kind of like a way to determine like how much of your deductibles are you willing to tolerate, how much of your risks that are going to be covered are you willing to tolerate, and how much are you okay with like, hey, the exposure's there, but I'm just going to accept it and not do anything.
Yep.
Have you ever run into a situation where it made sense to be self-insured, or what is self-insurance? How does that even work?
Yeah. There's a side of it that you don't know you have the exposure and you are just blind to that fact. And then there's the other side where you're aware of what's going on and you just decide to self-insure it. So, I'll just regarding this real estate investor, he has a ton of properties that he decides not to carry insurance on. And for him, it was, he doesn't need to. There's no bank telling him that he needs coverage on this property. And if it burned down, it wasn't going to really impact his organization as a whole. It was totally fine. And so when he's going through that decision-making process, that was his choice, saying, yep, I'm okay. if this goes down, if I lose $500,000 here or $1 million there, it's going to be a small portion to our overall company. So therefore, it's okay. For other companies, that is totally the opposite perspective. And so for them, it's I need to kind of move this over and have an insurance company take care of it for whatever that cost is.
Is there commonalities between different industries of types of insurance that people need to get?
Yeah. For businesses, there's going to be a few core insurance policies. First one, especially in the state of California, workers' comp. So if you have W-2 employees in the state of California, you're required to carry workers' comp. Bad news if you don't. Second of all is general liability. So for a lot of the people that we work with, your contractors, your manufacturing companies, so on and so forth, it's really just protecting a lot of the general business risks that they face. For a restaurant, we had this instance where a client, they accidentally spilled some really hot soup on a baby. That general liability was what took care of the medical bills for that baby. The other ones that are going to be your commercial autos, your commercial properties, your professional liability, errors and omissions sometimes is what it's referred to. And then one of the emerging ones is cyber liability. And a lot of businesses that classify themselves as small businesses, they don't view themselves as having a big exposure there, especially your restaurants, your contractors, everything like that. But if everybody remembers when Target had their incident, their cyber incident several years ago, the person actually got in there through an HVAC contractor. It was an HVAC contractor that was doing work for Target that was the back door into Target. And it's actually these smaller businesses and these businesses that don't realize they have the exposure that are the ones that are most at risk, because they don't have the risk management on the back end. They don't have the IT firm with all the levels of security and all the procedures in place to prevent it from happening in the first place. And so the people that are doing the hacking saying, easy target over here, I'm just going to go there. And so those are kind of some of the core concepts and policies that we use most often.
Wow, I think as a small business, that doesn't even cross my mind, the cyber liability. Like, who's going to hack me? I'm a nobody.
Yeah.
Like, what money do I have to give anybody anyways?
Yeah. I mean, just recently, there was a old CPA that I used to use. And all of a sudden I get this DocuSign out of nowhere from them, from their company. It's from their email address. And it's like, why are they sending me a DocuSign? And so I didn't click on it. I just emailed the company saying, hey, you sent me a DocuSign. What's going on with that? And they're like, we're so sorry. Our emails got hacked, and they sent out to all current and past clients this phishing scam. And how many people clicked on that? Especially if I was a current client, I probably would have clicked on it. And it's those instances that companies don't think about. And when you have those instances, it's, especially in the cyber liability space, it's a nightmare. Because there's oftentimes terrorist organizations behind it. So if you pay them, technically you're funding terrorism, and that's a major no-no, obviously. But you don't think about it. And a lot of times they'll demand Bitcoin. And so it's like, oh man, I don't have Bitcoin. I got to go buy Bitcoin and then do this in order to free up my organization. And so it's something that so many companies don't think about. And it's not expensive in order to get something in place to take care of it. And it's one of those kind of risks that we're talking about that so many companies are blind to right now, that we start to educate them and say, hey, just spend a little money over here. It'll take care of any situation that hopefully doesn't arise. But if it does, one phone call and it's all taken care of.
Yeah, that's crazy. Fraud is definitely getting more rampant. And as a CPA, like, if they were to get hacked, they're just going to send out emails like, hey, you have this bill, or IRS wants this. And like every business owner is like, okay, go make the payment. Like, and I'm a current customer. Yeah, I would easily fall for that. That's for sure. And you mentioned this, and I don't want to miss it, is like it's a lot affordable than people can think. So is that kind of probably another misconception that people have, is like insurance is expensive, but kind of sounds like it doesn't have to be.
It doesn't have to be. And, one of the unfortunate things, especially over the past few years, since COVID, everything's been going up, and insurance is no exception. So I get that it's really, as you see kind of your core policies going up significantly on a regular basis, to add something else on top of that, it's just not something that a lot of companies are looking to do. And that's where coming back to that bigger picture conversation really comes into play. Because as a company, if you're looking at that check that you're writing on an annual basis, and that is your sole focus in saying, I need to keep this as small as possible. Yeah, an extra couple $1,000s on a cyber liability policy seems like it might be unnecessary. But when you look at the big picture and you realize that, all right, now technically I'm self-insuring this, and it's a different equation. It's a different number. And by spending $2,000 here out of pocket actually reduces your exposure $500,000 or $1 million. That's something entirely different.
Yeah, when you put it in that sense, it's a lot more eye-opening. Hundreds of thousands of dollars versus $2,000 a year. Like, what's the break-even point? That's like 100 years before you even would have to break even on that, whatever cost is. So, and most people don't have like hundreds of thousands of dollars as a expense that they could just give out. I mean, just that, how much work do you have to do to make that even profit to then even have that to pay for some type of cyber insurance? So it definitely, as companies grow, it's something that they have to start thinking about. So then how would a company evaluate what risk partner to go with? How do they know which one to choose? There's like so many companies, like what should they consider as they're doing that evaluation?
Yeah, that's a really good question. And it's something that we're trying to educate as well, because, there are a couple things that we see a lot in our industry. One is obviously there's a million options, right? And for those million options, I would say 90, maybe even 95% of them, they're focused on the policy themselves. And the other thing is that for businesses, there's the tendency to just let it go. And I totally get why. Because since everything in the industry seems to be pretty much the same, what's the difference if I'm over here or over there? And so they just keep the same thing over and over again. But it's kind of like, it's kind of the thorn that is, it's a pain, but it's not painful enough to do something about. When we start engaging with a potential client and they come to us and say, hey, can you help us out here? They're used to us and anybody else in our situation saying, great, give us this information. We'll go back. We'll get you quotes. We'll see if we can save you some money. And for us, that's not the typical process. So when we start to work with a company, it's like, okay, that's what you have going on over here. What do you have going on behind the scenes? What are those things you're doing to prevent claims from happening in the first place? When you have a claim, what's that process look like? What are you doing to make sure that it's closed out on the back end? And when you have a series of claims, how are you analyzing what's going on to see if there's a root cause for that we can go adjust to prevent it from happening in the first place? Because they're focused over here, not seeing everything that's happening over here. And so when you're evaluating as a company the situation that you have for your insurance, if you don't have help, assistance, guidance regarding everything that leads up to your insurance premium, that's where it's time to pause and say, okay, what can we do differently?
It sounds like when companies are looking for risk partners and companies to choose for their insurance providers, it's more than just the costs, more than just the premium. It's like, who's going to be an actual partner? Who's going to do the analysis and evaluate where are my expenses? What do I need to do? What should I tweak? So it's going like above and beyond. It's like, how do I prevent the claim in the first place? Because if you could prevent the claim, you're going to save yourself hundreds of thousands of dollars anyways. And I know when I get a claim, like on my car insurance or whatever, it goes up. So if you get a claim, I'm sure renewing that, it's going to be extra money. It's going to be painful. So if you could prevent it, great. Because I think we touched base on the soft costs earlier as well, like the people aspect of it, the morale, and so on and so forth.
Yeah. And something to just kind of build on that. If you see and hear from your insurance agent or broker kind of at renewal time when it's time to get those new quotes every single year, and you don't see or hear from them in the meantime, that's kind of just something to pay attention to. What's going on between this year's renewal and next year's renewal? Because if the only thing that's going on is, hey, I need a certificate here, I need to make this adjustment here, and you're just reaching out to them and they're not reaching out to you to figure out everything behind the scenes and work with you. And you mentioned action plan, kind of say, these are the problems. Let's take these steps together and action plan together over the next 12 months to help improve the processes of your business. That's just something to clue into and saying, hey, maybe there's more that I'm not getting here.
Yeah, let's say you do engage a business and they want to get that action plan. How do you go about identifying what that action plan is? Do you have to go talk to people in the organization?
Yeah, that's really the first step. Talking to the people in the organization, and it's not always the people at the top of the organization. Sometimes it's the people lower down in the organization. There's this kind of really cool question where we've done this where we kick the management out of the room. We don't want them in there. And we just want to sit and talk to the people that are in there doing it on a regular basis, especially in the contractors, the people that are in the field doing things on a regular basis, and say, okay, what does the organization need to stop doing? What are they doing that's hurting the organization as a whole? And they'll let us know. Okay, what do you also need to start doing? What's not being done that needs to be started? And they'll let us know. And sometimes it's those conversations to the people that are holding the hammers, that are chopping the produce. Those are the people that see the day-to-day, and they're not blind to the facts. A lot of times they see what's going on. They say, yikes, we shouldn't be doing that. And it's just listening to them, engaging with them. So that's definitely one of the first things that we do. Not only, of course, we'll talk to the management and see what's going on there, but the organization as a whole.
Do you think like the managers are often scared if they know and they don't want to share, or they like fearful? Like, is that really the reason why you start with the staff? How do you get to the truth, I guess? That's really the question I'm trying to ask.
Yeah, you got to ask the hard questions. And you can't be afraid to really dive at what's going on. There was this hospitality, hotel group that we were working with, and they were having the same issues. And when we really talked to the people that were out there cleaning the rooms and everything like that, that's where we started to see, all right, this is what's going on and this is the impact. And we could make that translation when we were talking to management. Management said, oh, that's not a problem. Nothing's going on over there. Don't worry about it. We are operating at peak efficiency. Are you really? And so when we started to open that door and say, all right, this is going on here, and that's contributing to this, and that's contributing to this, that's when they realized, oh, okay, that 2 to 8 times soft costs, all right, maybe I see what you're saying there.
Does soft costs end up costing more for organizations over the long run then?
Absolutely. And it's more because they don't realize everything that's going on besides the fact. So let's just come back to this hotel. They saw that somebody was injured, and they didn't have what we would call a return to work program. So somebody was injured, they stayed at home. And as a result, the housekeeping staff, they couldn't turn over rooms quick enough. And that meant that the hotel could only operate at about 65 to 70% capacity. As a result, they didn't see their capacity issue was actually directly related to the claims that they were having on the workers' comp side of things for their housekeeping staff. When we opened up the door and said, all right, You're having the exact same claims for your housekeeping staff. Let's address that. Let's put in a return to work program that allows the housekeeping staff to focus on turning over more rooms that can increase your capacity and increase the profitability and the revenue of your company. It was a chain reaction that nobody was paying attention to. And those are the behind the scenes, the soft costs that organizations oftentimes don't see the connection.
Wow, it's really finding out that root cause then. It's like this problem here actually has downstream impacts to all these other things.
Yep.
The people over here are like, why is this happening? And they can't really figure it out.
Yep.
Let's say you create that action plan. Do you ever see them not follow it? And there's reasons why sometimes people don't follow the action plans
Yeah, we try to paint the picture and put as black and white as possible. This is what's going on, and this is what the return will be. But a lot of times it's also difficult to change the culture of an organization, especially if there's somebody that's resistant to it. And until there's that change in culture, oftentimes there's resistance to that change that we're trying to implement. When that change in culture is being resisted more on the grassroots level, it's natural. It's going to happen, but as long as there's consistency from the top, it'll happen. It'll improve over time.
Yeah, that's actually pretty interesting because it sounds like you guys are really focusing on the preventative aspect of it. So it's like not only are we providing insurance, but we're providing you ways to prevent things from happening. So this is the action plan. This is how you prevent your liabilities, your workers' comp, your claims, et cetera, et cetera. The preventative stuff is like, don't let the problem happen in the first place and you'll save yourself tons of headaches. But then we're kind of like talk about like preventative stuff, action plan, making these changes. So what is that full insurance lifecycle?
If I come to an organization, especially a CEO of a company, and say, hey, there's these 15 things that we want to do right now, that's way too much for an organization to bite off. So, hey, these are the top things, the top 2-3 things that we've identified for your organization that are causing the biggest headaches, the biggest issues, and let's handle those first. So that's kind of where we start. From there, we move into the implementation part of it, helping them put in those new systems, those new processes, and tying that into their protection piece. So we started with the prevention. We come down to the protection. That's where we start looking at those insurance contracts, the exposures that they have, that total cost of risk conversation, and saying, all right, here's the protection aspect. The last part, that if an organization is of the right size, that we get to is what we call the prosper aspect of it. And the reason I say the organization of the right size is because organizations doing below, say, $1 million, really the blocking and tackling is going to have the biggest impact on their business. As an organization really grows, they start getting to $2, $5, $10 million and above, there are some really advanced things that they can do from not only a risk management and insurance point of view, but also from a financial point of view, tax strategies, investment strategies, that there are these really cool vehicles that we can start to layer in. And it's really interesting to see organizations be introduced to that, see the potential of it, and implement that into their businesses to unlock things that they didn't know were possible. And there was a conversation that my wife was actually having with a family friend who ran a multi-billion-dollar organization. And he was just chatting over dinner and said, man, the insurance company, they non-renewed me because I have a whole bunch of properties in California. They didn't want the California fire risk and this and that and the other thing. And so what he discovered was that he can create his own insurance company because he was in an organization of that size that could facilitate that. That unlocked so many more doors for him. And there's obviously, you don't need to create your whole insurance company all by yourself. There's baby steps in between, but there's some really cool things that organizations can do that they just don't realize. And it can actually hit on so many pain points that they have.
Wow. So it sounds like as the businesses grow, there could scale, and maybe there's some business strategies to some of this. But you mentioned it's the millions of dollars and so on and so forth, where really some of this stuff starts to come into play and where they can really prosper. So at what stage should businesses really start considering some of these types of insurances and strategies? Is it like a specific employee count where that triggers like more regulation and then other things to consider to then build upon and get to those additional business strategies?
If you're an organization doing over $2 million, that's when you start looking into these other alternatives.
Nice. What about a small business? If they have 5 employees, do they need any insurance in general, or at what point do they need to get insurance?
Yeah. I mean, oftentimes, even when you don't have any employees, there are still insurances that you need. And whether or not you're operating as a sole contractor, kind of a handyman, but you're in people's homes and you're doing work on their properties, if something goes wrong, that's coming back on you. And so maybe you're trying to fix some pipes and it has an issue, it breaks, and there's water damage all over the place. Are you prepared to pay for that water damage out of pocket? No? Okay. You could solve that with a really cheap, few $100 a year, or maybe, a couple $1,000s a year. And so from the very, very small organizations to those larger organizations, there's usually a need for insurance, and it's just a matter of figuring out, okay, what do you actually need? Because for those small companies, the sole one-man bands, we have a special place in our heart for those because, we've been there. And so there is so much that they need, and just some guidance. Here, do this, do that. You don't need this over here. And I think that's the most important thing to know, is that oftentimes us in the insurance industry, we get a bad reputation, self-imposed, because it's oftentimes, hey, there's this exposure and that exposure, and you need to buy this and buy that. And we come across as saying, okay, you need to spend more money. It's easy for other people to tell you to spend more money, right? The difference being is, what is the reality that you have an exposure for, and what, yes, you really should have this, and what, nah, you don't really need it for where your company is and what your company does.
Yeah, so it's kind of like tips and recommendations on you will need it eventually as you grow, but really this is the most important.
Yeah.
If you are willing to tolerate that exposure for now, that's fine.
Yep.
Because you really need the profits to kind of scale.
Yeah, exactly.
So what about audits and OSHA requirements and stuff like that? I mean, most businesses are like, OSHA, how do I get compliant with OSHA? How do I prepare for audit? Do you guys help with that type of stuff too?
Yeah, there's oftentimes some simple things that we can do. And, OSHA's a really scary thing. We had, somebody that we work with that they've had some workers' comp claims that's reflected in this score called an experience mod. So it jumped up over a certain level. And they got a letter from Cal OSHA saying, hey, now you're a high risk employer because you've had these workers' comp claims. And so it's a scary thing as a business owner to remain OSHA compliant. And oftentimes it's just the guidance. They have the manual for it. How do you translate that manual into easy to implement steps for a company? And so it's that translation, I think, is really something that businesses just can utilize at the end of the day, whether or not it's OSHA compliance or insurance contract lingo, translation. There's all of these complicated rules, regulations, contracts how do I really comprehend and understand it and put it into easy to implement steps at the end of the day? And OSHA is definitely one of those areas that we can help a lot of our companies with.
Let's say you've helped out one of your companies. Do you ever get like feedback? Do they ever reach back out to you? And what kind of feedback do they give you?
Yeah. A lot of times, there's some organizations when we start working with them, it's because they have a lot of claims that they want to get under control. As we start to really work through those and implement a lot of the steps and the systems and processes that help bring those down, they love that. And when we help them get to that point where they're running pretty consistently as well, it starts to become something, well, what can we do next? What can we do next? What can we do next? And you're operating really well in general. Like, you're doing 99% of the stuff. You're never going to eliminate 100% of your risk. It's just not a reality, nor should it be a goal. And, we have a roofing company, a good-sized roofing company. When I did their initial site inspection along with the carrier safety rep was like, hey, how long have you guys been working on this? Because this company is awesome. And it was like, yeah, they're doing all the things that they should be doing. I think the feedback that we oftentimes get from clients, especially, after they've been working with us for a while, is we really appreciate the translation, that you can put things in terms we understand and give us really a handle to the briefcase of this complicated world, so we can go from A to Z with the clarity and the confidence that we're doing the right thing.
That's great that you give that risk clarity. I'm sure that's a big burden off people's shoulders. But I bet you a lot of people just have insurance that's been there for like years. They haven't touched it. They haven't looked at it. Yeah. So is there a science to like how frequently you should review your policies?
Yeah, there's definitely a science. And not only reviewing the policies, but how you also go and submit those to carriers. And so, especially as a company comes to us, and as we put it, there's some hair on the account, meaning they have some issues. If you go to an insurance carrier, to the underwriters, and say, hey, these are the issues going on with the company, but we've identified them. This is what we've already done in a short period of time to actually start to make some progress here, and this is our plan moving forward. They're much more likely to take a risk on a company. Now, that being said, we don't want to abandon them at the first renewal, right? We want to show them some loyalty as well. And so same thing goes for your insurance representation as well. If it's just been sitting there collecting dust and your agent, again, a little incommunicado, things just renew as is, you send some emails, you get replies in hopefully a timely fashion, but there's not a lot going on behind the scenes, then it's like, okay, well, are we really at a point where we should be? And what are we missing? Reach out to them first. Maybe it's something they do, and it's just a matter of, hey, things have gotten complacent. And if they're not providing you the level of expertise that you feel you are looking for, then it's time to start looking other places. And there's a lot of great options out there for sure. But just find somebody, interview a few people that you want to find out what their process is. And if their process is, give me your information, I'll go out, get you some quotes, see if we can get you a better price, that's not the answer you're looking for. You're looking for somebody that's going to be a partner for that organization, analyze what's going on, put together a plan for you to implement, and help you implement it.
Yeah, and I like that plan, especially if you're going to the insurance companies. and helping them negotiate the actual rate, because like you have the action plan, you're like, hey, we're gonna fix all these things, so their risk exposure should be a lot less. Then they're probably gonna get better rates, they're probably gonna get better coverage and things of that nature, because they see that they're being accountable to some of the changes, they've already implemented some changes, and so like they could really evaluate like, oh, if this is a 49.51, this might turn it into the 51.49 to actually take him on as a customer. Man, that could be thousands and thousands of dollars at the end of the day as well. So that's a huge cost savings.
Oh, yeah.
What about someone that's like watching and they're kind of on the fence? They're like, I don't know. It all sounds like magical. This whole stuff, risk management, exposure, liabilities, workers' comp. What would you tell that person that's kind of on the fence, that has a business, who's thinking about reaching out but isn't sure?
I think there's not any risk in reaching out. And the reason I say that is because when somebody comes to us, and whether or not they end up working with us at the end of the day or not, if we can have a conversation with them, show them some things that maybe they aren't fully aware of, and they say, that's nice, but I'm fine with how I'm at least they know what exposures they might have. If they're just completely blind to it, that's something else, because what happens there is they get exposed in the worst possible way. They think they're okay, and they're actually not. And the worst feeling for a business owner, because I've been there, is you think you're covered for something. The reality is you're not. All of a sudden, that has a massive impact on the business, whether or not it's something small. Unfortunately, oftentimes it's something a little bigger that has the ability to completely decimate that business. All of a sudden, overnight, they're out of business. And we never think it's going to happen to us. The best thing you can do, know what's going on behind the scenes, know what exposures you have. If you want to make the cognizant decision that, yes, I'm okay with that, totally fine. The worst thing you can do is to be blind to it, know that you're blind to it, and be okay with it. That's where you start to regret it.
Yeah, you definitely don't want to be blind to risks. If you could teach one thing about risk to every business owner, what would that be?
A lot of people think that what you need to do is buy an insurance policy for it. And that is one way to handle it. That is by no means the only way to handle it. And oftentimes, it's the second most expensive way to handle it. First way is to self-insure it and unknowingly self-insure it. Second way is to buy an insurance policy for it. And the cheapest way to do it is prevent it. And so when it comes to risk management, for me, I think everybody, I just wish they would be aware that there are things they can do, simple things that don't take a lot of time to prevent things, the bad things, from happening in the first place. And if they just were aware of those and implemented them, it would be much better for their organization.
If you don't want to pay for the premiums, if you don't want to pay the insurance, if you want to self-insure in a way, just prevent it from happening in the first place. Just focus on that.
Yep. Easy as that.
Yeah, I mean, especially for the small business owner or people that have small teams that are still really trying to save costs everywhere that they can, just do a consultation, figure out what the exposure is at least, implement an action plan, and hey, don't buy the insurance if you're not going to buy it.
Yeah.
But prevent it for sure. That's definitely a good approach to it. Geez, I always thought of insurance as like just payments. I never really thought about the preventative side. I feel like there's a whole another world to risk that people often just don't think about. What qualities do you think someone needs to have to be a good risk manager?
In my opinion, definitely detail-oriented and systems and processes oriented. And the reason I say that is because, it's easy if you're detail-oriented to say, hey, that's an issue, that's an issue, that's an issue, that's an issue. But it's also being able to put easy to implement systems and processes in place around those things. And I think that the last thing related to it is somebody that can distill a complicated concept into something that is easy for people to understand and get implemented. Because at the end of the day, if I tell you all these things that are going wrong and I give you this laundry list and it's a 12-step process, the chances of you implementing that, 0. I am by no means ever expecting a company to do that. But if I say, hey, there's this little thing over here, you do this small adjustment, boom, you made a massive impact on your business. That is something that's easy to implement, because at the end of the day, risk management is all well and good. It's an entirely different thing to be running a business and be able to layer in those other things with running the business efficiently.
Yeah. How do you make sure that it doesn't stop you from meeting your mission, from operating?
Yep.
So where's that biggest return on investment? Yeah, being able to identify that's going to be pretty big. Is there anything about Utopia Risk or risk management in general that we didn't cover that you wanted to dive into?
One of the things that Utopia Risk that we have is my partner. The thing that he is able to do is have that level of connection with all these Spanish-speaking business owners. And there are so many out there. They do such an amazing job, and they just need some guidance. But they like guidance from people that understand their culture, that can speak their language literally. And so having that component to our business, I think, has been something that is something we didn't cover yet. That's really helpful.
No, that's very cool. You're able to hit multiple demographics, and Spanish-speaking customers definitely can get it right from their own community if they wanted to partner up with Utopia Risk. Where can people find out more about Utopia Risk, get in contact with you guys, your social media handles, things like that?
You can find us at utopiarisk.com. Also, one of the cool tools that we've developed is I talked about total cost of risk. And so if you want to find out your total cost of risk, we have instantriskreport.com. You can go there, check it out, plug in some information, see the bigger picture. And check us out on YouTube. We like to share some of the real world stories, because I think that's the part at the end of the day that has the greatest impact, is that there are other businesses out there going through the exact same stuff that you are. And if you can learn from those stories about what's going on, some issues that other people had, I think it's a fun way to handle insurance, which is not a fun topic. I get it. But B, you get to learn from some of those real world stories and get those implemented in your business.
Yeah, I think half the battle is knowing what not to do. So we'll definitely get the social media handles, the links to the websites, all that in the description below. So if anybody's listening on the audio version, open up the description and all that stuff will be there. We have a segment where the previous guest leaves a question for the next guest. And the question I have for you is, what is one non-negotiable that you do every day that you can't live without?
I work out every day. Every single day. Sometimes I need a rest day, so it's not anything crazy, but it's something I can't live without, and it's become just part of my routine.
Well, Nathan, thank you so much for joining us today. It's been a pleasure talking about risk management, Utopia Risk, and things that businesses probably are just blind to.
Absolutely. Thanks for having me. I appreciate it.
Today's conversation reminded us that risk isn't something to be feared. It's something to understand and manage with intention. So thank you for watching this episode of the Key Casas podcast. We'll catch you on the next one.